Yeah, REA Group we think is one of the best quality businesses in the Australian market. It has very, very light capital requirements, so it's a sort of business from a shareholder's point of view where not much money goes in and a lot of cash flow comes out. There's some uncertainty at the moment in relation to the property market and whether we might be headed for a correction in the property market. But as investors in REA, we're less concerned about what might happen there and more interested in what might happen over the long term. And when we think about what might happen in the long term, we see that REA is a business that generates tremendous value for vendors of residential property. And relative to the value it creates, we don't think that it necessarily charges a very high price. So we think that over time there's the potential for REA Group to play a bigger role in sale transactions for Australian residential property. And to the extent that we see the residential property market having a more difficult time, that arguably increases the value of REA Group to vendors. It makes it a little bit harder for them to find the buyers, and REA Group's ability to connect vendors with buyers we think potentially becomes more important. So it's another interesting case where there's some short-term uncertainty that may be influencing the share price, but in the long term we think the prospects for the business are extremely strong, and those very good economics mean that in the long term it has the potential to be a very, very rewarding investment for shareholders.